Talk now with John Bollinger, our technical analyst here at Financial News Network, to look at today's rally and whether or not you think it's for real.
Well, it sure feels for real to me. I really like the volume number. We're expanding volume over the 10-day moving average by a very good measure. And that's the kind of thing that you need to see to confirm a breakout of a trading range.
This is the kind of rally we probably wanted last Friday when we had that 40-point move in the Dow.
That's right. But this confirms Friday's action. Monday was a nice little respite day, a rest, a consolidation day, and we're off to the races again today. What's interesting is the numbers that people were waiting for today weren't all that good, but the market's reaction to them was very good. So you have that old idea that I always like to talk about: analyze the news for its literal value and then gauge the market's reaction. Well, the market is reacting to the news a bit better than it should be, and I think that's an overall positive for the market.
Here's how the market did react. This is a chart of the trading today in the Dow Industrials, and watch that spike open this morning. Big spike, and we haven't even begun to correct that.
That's right, and I think it might be a little bit before we really do correct it. What I really want you to see here is the nice smooth quality of the trading to the upside.
Not very volatile.
The buy programs, and there were some today, are tiny little moments in the market. Here's one right here. Here's another one sitting over here. There's another little piece over here. But overall, the bias of the trading today was very positive, very smooth to the upside. You can see even the sell-off that we've had in the past hour or so has been very smooth, nothing giant on the downside, just a little bit of essentially consolidation from this little overextension that we got by these two buy programs back to back right here.
Theoretically, what you're saying then is when we see those buy programs, that means the institutions are in there, but the fact that it has not been a very much a heavy buy program day, the little guy's in there today?
Well, more than the little guy, the general investor.
All right.
In other words, it's not only the program traders. It's not only the hot money chasing after instant rates of return.
It's the value-oriented investors and so forth.
The investors in there, and institutional and individual alike. And that's what I like to see in this market. I like to see the volume expand. I like to see the trading be smooth and positively biased. I think that today's action really earns the market a couple of gold stars.
I think for that reason, you can't even call it short covering either, can you?
Today's rally does not feel like short covering. Friday's certainly seemed like there was more than a bit of short covering involved in that. But today it really feels like genuine money flowing into the market. People making commitments to stocks and you know, hopefully stocks that they like, stocks that they're going to hold on to. We'll see over the next couple of days whether that's the real dynamic. Again, the next couple of days are going to be very important to watch the trading dynamics, the volume levels. We want to see if the market corrects here. We want to see volume dry up, and then if the rally resumes, we again want to see volume expand into that rally.
And a big question everybody has today is, do we have a Dow theory buy signal? And that's something we'll talk about next half hour on Market Wrap, right?
That's right.
Thanks, John. John Bollinger, our technical analyst here at FNN. Looking at what happened to the interest rate futures and various other markets today. Ed Hart here with his closing call. Big day there.
Yes, very big day. In fact, the ADRs, the Japanese ADRs, looking very gutsy. They're expecting a big opening in Tokyo, coming off what, because they've mapped well, waiting for our consumer price index. And while the CPI number in any ordinary year would have really been disastrous, this year they were braced for something a little bit worse, and so 0.5% for 1 month didn't look all that bad. Meanwhile, the threat of inflation, according to some folks, is not quite so bad as it looks, although it has a way of sneaking up on people. But Jerry Jordan, whom you've often seen here on FNN, chief economist at First Interstate, he's testifying in Congress, and he says that the inflation you're seeing now is because of all the money that the Federal Reserve pumped into the economy back during 1986, and that he doesn't really see, because of the squeeze, at least the relative squeeze that we've been undergoing, he doesn't see that kind of inflation regenerating again. Well, we'll take a look at some of the interest rates prevailing now. Fed funds are at 9 13/16%, and the 3-month T-bill rate plunges again. And one thing quite signal about this move is that despite the plunge that's been going on for a little while in U.S. interest rates, you haven't had that much damage to the dollar relative to other currencies. The traders out there still feel that they want it, and of course you get this extreme volatility in the short-term rates, partly because there are so many traders doing it. That's supposed to give more liquidity, but to me a herd just becomes a bigger herd when there are more people doing it. 8.43, down 14 basis points to yield 8.712. 6-month bill at 8.42, down 17 basis points to yield 8.894. And the long bond at a yield below 9%. Not quite as low a yield as it was when the last one was auctioned, but even so, that loss has already been absorbed and forgotten about it. 99 7 up 36 seconds, dropping the yield to 8.936. Some folks may feel it's a little richly priced, but that's what's going on. Fannie Mae up 2 at 69 1/8, breaking out of that small double top at 69 with a big increase in the dividend. And of course, that's what had run the stock up, the expectation thereof. Bankers Trust up 1.25 points, and that's a new high at 43 5/8, equaling a year high, I should say. Coast Savings, not quite a new high. It's not really in the very top tier of savings and loans on the West Coast, but up 3/4. It's at 17 3/8. And Transamerica at a new high for 1989, up a half at 35 3/4. U.S. West of the regional telephones up 3/4, 63 5/8, a new high. Mercury Savings and Loan, one tick off of making a new low, down a half at 4 1/2. So a very big market today, and they're expecting a big market in Tokyo, which will be opening in a few hours. And Bill will have that later.
Portions of the following program are brought to you by Las Vegas, the American way to play, and by your local authorized Porsche dealer.
Good afternoon, everybody, and welcome to Market Wrap for this Tuesday. It's the 18th of April. I'm Bill Griffith. Stocks and bonds rallied in a big way today following this morning's announcement. The March Consumer Price Index gained a widely anticipated 0.5%. Market strategist Trudy Latimer with Joseph Thal & Company will join us in a minute with her thoughts on today's big jump. And we'll visit with a self-proclaimed stockaholic. James Morgan with Interstate Johnson Lane will tell us which stocks he's currently hooked on in this market. Plus, Money Magazine's Jordan Goodman will update us on investments in the junk bond market. And Frank Tauscher will be here a little later in the hour to talk about his new 1989 Commodity Traders Almanac. Here's what the Dow, do we have the Dow chart today? There it is. The Dow Industrials today finishing up quite strong. First thing this morning, we were very strong on some buy programs this morning, but then just a general drift higher. Not much in terms of buy programs. It was a lot of just very slow buying come into the picture, and we finished the day with a very clean 40-point move, now a 41-point move on the Dow Industrials, 2379.03, a new recovery high. Highest level we've closed at since the crash of '87. Bonds were very strong as well today, and we did have a 200 million share day on the New York Stock Exchange. So this rally did look for real. We'll talk about that with all of our guests coming up after these messages. Stay with us.
What is that, sir? That, Charles, is my new Porsche 928 S4. Shall I have the chauffeur put it in the garage? Fire the chauffeur.
Compaq is the leader in performance and intelligent innovation.
Martin, we've got an hour tops. Make or break.
Did we in fact get a Dow theory buy signal? Transports are at all-time highs. The Dow's at new recovery highs. What do you think?
Well, let's just start with a real quick explanation of the Dow theory as it's not universally known. It was developed by Charles Dow of Dow Jones & Company fame as an indicator for the economy, not as an indicator of the stock market.
Right.
His successor at the Journal, Mr. Hamilton, codified it into a real body of theory. It was just a series of editorials that Mr. Dow had written, and developed it into a forecasting tool for the stock market. What it says is, in essence, is the action of the transportations and the industrials must coincide. And that if both rally to a new high, they give a buy signal. If both break an important low, they give a sell signal. So today we got one of the pieces in a long-term sense. The the transportation average rallied to a new all-time high.
The previous all-time high, we go to the chart here and you show, the previous all-time high on the transports was back in, when was that? In August of 80... August, it should have been 87, not 89. We haven't hit August of 89 yet, have we?
No, not quite.
So it should be August 13, 1987.
That's right.
Which is just before the Dow Industrials peaked out, too.
That's right. And today's close on the transportations at 11:14 was clearly broken through. So we have one piece of the puzzle. The transportations went to an all-time high, pulled back, and have now gone to a new all-time high. That gives a piece of the puzzle. But let's look at some charts and really get a feel for what it is. We'll start with the industrials because that's what the story's really about. Here's the all-time high on the industrials over here on the left-hand side of the screen in the 2700 area. The October massacre. I prefer to call it a crash instead of a massacre. I don't know I'm supposed to use this thing. But
go ahead.
Sometimes, you know. And here's the recovery. Now, you see, during the recovery, we made each of a series of new higher highs and then had pullbacks. These are little micro signals, and they were all confirmed by the transportation average. Now the transportation average, as we'll see next, is broken out to a new high. So we're waiting for the Dow Industrials to confirm it. And again, here's the transportation average. You can see this line is just drawn across here for quick reference. You can see we've clearly broken out to a new high. So on a micro level, we have a situation where one average has gone to a new high, giving us one piece of a very long-term buy signal.
All right.
Now the other piece is we're waiting for, and that is for the industrials to rally to a new high. Now
we're only 250 points away from that.
That's right, but we've been accelerating. You know, another 6 months could possibly do that. However, the flip side of this is if we were to sell off now and go to new lows, new post-crash lows in terms of both averages, that would be a massive long-term Dow theory downside confirmation signal, and which suggests price targets way down there. So we're kind of we're in a limbo. On a very short-term sense, we have gotten a buy signal. In a longer-term sense, we are betwixt and between.
Very interesting. Thank you, John. John Bollinger, our technical analyst with Point.